Week 1 on the road to £1 million and early retirement. If you want to know how to pick better value stocks, then keep watching and I'll show you a powerful approach to this. I follow a value investing approach, buying stocks that are trading for less than their worth, but I don't go digging through balance sheets or flying out to Omaha. I use tools to help me systematize the process, because most of us, as retail investors, need a repeatable, simple system more than perfect insight. I use a backtesting tool I've built to simulate decades of performance. I look for stocks that meet strict value filters, things like high earnings yield, low debt, strong return on capital. Then I run that filter across 30 years of historical data to see what would have worked. Let's take a look at that in action. So this is the tool I use. It's got 4,200 stocks in it, or just over that. It ranks those stocks to find the cheapest stock using different criteria. So as an example, we've got something called the magic formula, something called the acquirer's formula, PE ratio, price to earnings ratio, and discount cash flow calculation. And what it does is it looks through all of those stocks in the database and then ranks them accordingly, with the best value stocks appearing at the top. And at the moment, I've got this set to last year, primarily because this is only being tested at the moment. And I wanted to be able to show it to you, but not show you current data. I don't want anyone being tempted to use my test to buy stocks. Hopefully nobody would, but just got to play safe. So what we do here is, if I select one of the criteria that I want to buy stocks for, first of all, let me just clear all of my previous trades out of the database, which I've done now. I can then find all of the top ranked stocks based on the magic formula. I can select them all. I can give them a name. Let's just select anything here for now. I can then distribute how much of each I buy. What I'm actually going to do is set this to 14, which is the number of stocks I buy based on the best performance I've seen in backtesting results. And we're going to be buying 7.1429% of those to evenly distribute our buys. And we click buy. And what that does is it simulates buying those on the selected date. And our simulation date currently is the 26th of April. We've got them all tagged with the same code. And what we can do is we can then move our date forward however much we want to. So let's say we want to move our date forwards 12 months. We can then see the impact of that for each stock, the impact on our return on investment. So I'm going to run that, and we'll come back in a moment. Here's the results for our 1 year backtest. We spread £1,000 over 14 stocks earlier, that grew 1 year later to £1,201.39 for a 20.14% gain. We can see our results on a graph. It also gives us all the buys carried out. Now this particular test was one batch of stocks for one time period. We can continue to test in this way, but we've also got a separate bulk batch test process, which I'll show now. So here we've used another little tool, and we can see we've got our magic formula. We've got £1,000 that we've invested. We're going to invest in 14 stocks. We then select annual dates from 2000, approximately 1 year apart, in this case, all the way through till 2025. We're buying the best 14 stocks on the 3rd of January 2000. We are selling them 1 year later on the 3rd of January 2001. We started with £1,000, ended with £17,000 and 34 pence for a return of 73%, 14%, 44%, 181% in 2003 to 2004. In 2012 to 13, there was a 395% return. In 2020 to 2021, there was a 429% return. Now obviously, there is some losing years in there. There was a 51% drop, which is a huge drawdown, from 30,000 down to 14,000. But we can see here that the final amount actually is quite astonishing. It ends up being at 4.87 million. Now that's if you were to keep your full amount invested throughout. In reality though, depending on your risk appetite, you might well have been taking some off the table at certain points to protect your return. Through to 2020, we had 920,000 in our pot from a £10,000 starting point, which is quite astonishing. And then 2020 was a stellar year for the stock market, and by April 2021, we would have had 4.87 million in our account. And so what we can also do is, let's look at some of those stocks in 2020. If we expand that, we can look at all the stocks that it would have bought. So they've had Barclays Bank in there. That's the main big one there, and Microvision, and a number of others there. So it gives you the stocks it would have bought, what the return on each of those stocks was. We can see here, Microvision looks like an astonishing return there. And if you're ever any doubt on any of your numbers, you can validate those just to make sure that there's not anything wrong with the data, but that's the backtest strategy that I use. Hope that was helpful, just to see how powerful backtesting can be. Subscribe and click the bell to get notified about further videos and backtests like this, and I'll also be sharing portfolio performance.